Hello and welcome to Money Control. You've tuned into IPO Weekly Wrap, and I'm your host, Nikki Mirchandani. The primary market remains subdued at the beginning of the calendar year, but three public issues worth around 1,250 crore have been lined up for the upcoming week, which is also a week marked by earning heavy season. Amongst them, of course, Max Exposure and Addictive Learning Technology are the two SME IPOs that we'd be working with. They're opening for subscription on January 15 to 17. That's for Max Exposure. And Addictive Learning Technology would be opening in for subscription from Jan 19 to Jan 23. On the main board, you have Jyoti CNC Automation, which is going to be perhaps listing in next week with a price band of around 315 to 331 per share. That was the price band, anticipating a 14 to 15% kind of premium over the issue. That's what at least the grain market premium is suggesting. But let's shift focus on Medi Assist Healthcare Services IPO, which is the main board IPO that opens for subscription on Jan 15 to Jan 17 with price band of around 397 to 418 per share. Of course, you also have the promoters which have already reduced in their ownership prior to the anchor book and IPO opening dates. But that's that when it comes to the entire main board issue. But let's get to know more about the company from Prashant Tapse, who is the Senior Vice President, Research Analyst at Mehta Equities. And also joining us is Asta Jain, Senior Research Analyst, Hem Securities Limited. Evening there, and thank you so much for taking out the time and joining us over the weekend.
Very good evening.
Prashant, let's start off with you. What do you actually, make out of this entire main board IPO? What are the key highlights for you, and also three negative points for you? And then we're going to go across to Asta.
Okay, so with Medi Assist, I think it's a decent company which is going to list very soon in the next week. They are into healthcare industry, that is a third party administration business model. Very decent business model. I think it's a first of its kind business model which is getting listed in Indian markets. And on the valuation side, again, very much reasonable with around 35 to 40, 35 to 38 PE valuations. It is very great to see that the Indian healthcare industry is growing fast. If you see, as on date, as per some reports saying that 16% of the population is being covered for health insurance, and as per some reports again, 30 to 35% would be coverage in next 5 years. And even government has a lot of scopes in healthcare industries. There are programs running 2047. I think government is thinking to have insurance to all. So these kind of activities are going around in healthcare industries, and TPA business is a business where they get their fees upfront and they pay the premium. So it's a great business model, a great valuation right point of time, and even the market mood is great. Today we are again making an all-time high. So I think this IPO would do great coming forward for long-term investors, and I am giving a subscribe rating for this.
Okay, a subscribe rating for long term or subscribe just for the matter of listing pop? That's the question that I always ask.
So I think it's a good for long-term holders only.
Right, Asta, what's your view? Are you giving it a subscribe? Are you just waiting for the listing pop? What's your assessment? How are you? 5 key highlights from you.
Hi, good evening. So, talking about this company, first of all, this company is into the niche market because they don't have any competitors. They are working into the health tech. It is a health tech and the insurance technology company, basically providing, and working as a third party administrator. So, I mean, there is no listed company in the same space which is working right now. So, they have this first mover advantage as well as scarcity premium because they are coming at a P multiple of more than 30. Right now, whether this multiple is, fully priced or not, that cannot be judged because we don't have a similar company in the same space. But looking about the financial performance, it looks very decent. The kind of bottom line and the top line growth this company is posting along with the strong margins as well as return ratios. So I like this company. Business model is very attractive. We're in the only company in this space. The company will definitely attract scarcity premium. So even my recommendation is subscribe for the long-term purposes to this IPO. Now, if I talk about the listing gains, so it might fetch some sort of listing gains, but this IPO is mainly for the long-term investors. So here the advice is just put your money, keeping in mind the long-term view. Maybe on the listing, the returns can be generated or not, but in the long term, definitely this company will gonna fetch returns.
All right. Just for the viewers out there, what Medi Assist Healthcare technically does is through its subsidiaries, it offers third party administration services to insurance companies. It manages health insurance claims, network management, policy administration, and customer service put together. The overall size is around 1,170 crore. Prashant, does it even bother you that the promoters have actually sold some amount of shares in the anchor sell-off? Do you see that as a bit of a concern per se for the company?
Yes, you rightly pointed where a promoter gets down below 50% of the holding, there is a concern for a new investor like us entering at these levels. Even the 100% OFS, always market doesn't give you that premium what whenever you get a OFS sale. So I think that's a major concern. But I think yes, from last 10 years there were two, three PE equity investors, those who want to get exit from these IPOs. Even promoter is taking some kind of advantage of that exits.
Sure, it is a fully OFS IPO, right? I mean, 100% OFS is what we are looking at. So I derive some sense of mixed trend out of that. Sure, we're looking at a first mover advantage, but at the same time, it's also an OFS where promoter is also knocking off significant amount of shares. So perhaps a little bit of confidence also is not a sense that essentially you're picking up. But Astaf, according to you, which are the two key or three reasons that you think could be a bit negative or challenge for this company?
Talking about the 2 to 3 major reasons. First of all, since we don't have any company in the listed space of the same kind, so definitely whether the valuations are, on the higher side or not, it is difficult to judge. But yes, I can say that coming at a P multiple of more than 13 itself says that the equity is, the issue is fully priced. So that is the major thing. First of all, the valuation. So that can be one of the, major concerns about the company. Talking about the other concerns is yes, they don't have any competitor in the listed space, but we have a unorganized market also, so the competition can be there for this company too. So there can be, other competition from the other spaces also, which this company can face. So I think that is the another point. And third point is, these the kind of business the model the company is having. I think this kind of business model, the growth we have to see from a very long term perspective, because health insurance is something, and we all know that in the insurance right now, the companies which are there are various companies which are working. So we have to see that also, that it is a long term, growth story. But in the short term or the mid term, I think we really need to see whether this kind of, stories can work or not. So I think more for a long term play, but for the short term or a mid term purpose, there is uncertainty on that part.
All right, point well taken. Prashant, according to you, what is that two or three factors which per se are a bit of key negatives for you?
So I think again, what the other analyst said, she is rightly pointed on the valuation side. With no peers, it is very difficult to analyze is it a right valuation or not. But for me, the negative would come in terms of the competition from the unorganized players. But with the market share of 20% plus, and they are working with a lot of big insurance companies. Group insurance is the major business revenue which Medi Assist is getting. So any downside in the segment of group insurance, that can also be a negative thing. But again, concerning about the promoter holding getting down below 50% is also a negative point which one should focus on.
How is the industry growth of this business per se? Sure, first mover advantage, but has the company managed to outperform the industry growth thus far? How can we look at it? What are the levers essentially which you guys, both of you, can think first, perhaps to Asta, that which are the margin drivers for the company going forward? Sure, the valuations according to you are at a premium, scarcity premium, and rightfully so. But according to you, what is going to be the tailwind working in the favor of this one?
So, if we talk about the industry tailwind, definitely the insurance is a very much upcoming sector. First of all, the kind of demographics which India have, the kind of young population which the country is having, and now after COVID, the population is becoming more and more aware about the insurance, and they are doing it. So I think the industry tailwind comes directly from the demographics which the Indian population is enjoying right now. The young population is there. They are becoming more aware about the insurance and all. So that is the major tailwind for the sector. So I think that will really help the company in showing strong numbers going ahead in the long term, and that is why I'm advocating it for more for a long term rather than short term basis. So I think the industry first and the foremost tailwind for the industry is the Indian economy and the Indian demographics, in which we have a huge percentage of the young population right now, and they are becoming more and more aware about the insurance as a space.
All right, Prashant, the factors that have been working in the favor of the company, according to you?
I think the inflation rate what is going high in the medical field. So people will go forward to have insurance is as a compulsory policy for any one in the family. If you see last 10 years, the insurance penetration was almost 7%, and today we are sitting at 16%. And industry reports are saying we'll be at 33% in next 5 years. So this would be the major trigger, and lot of corporates. I think the group insurance business where Medi Assist is the market leader with 20-25% market share. A lot of companies are taking medical insurance for their employees, and a lot of organized sectors are growing very fast faster. If you see, they have almost 9,500 companies covered under group insurance, and last 2 years, it was around 7,000 7,000 companies which were under insurance business model. So it is growing really, really fast, and I think the industry will be the best to give them the trigger to grow going forward, and they are outperforming. I think the way how health industry is going, they are almost performing 1.5 times to the industry growth. So this will continue, and it is being continued from last 5 years.
Sure. For both of you, I think we're just going to navigate now towards the second listing per se. Of course, it's not open for subscription. It's going to be listing in. Of course, we're talking about Jyoti Automation. It was subscribed almost 40 times for the week in the week gone by on day 3. Prashant, according to you, what do you make out of the listing? Are you expecting some premium gains coming in on this one, given the kind of subscription that we've seen for Jyoti?
There was a very surprise moment in the last day of subscription. For first 2 days, it was very much subdued, but the third day was a surprise. I think a listing gain around 15% to 18% can be expected in Jyoti CNC, only because of the turnaround story which I see in Jyoti, because of the huge order book, and plus the debt reduction going forward after the objective of the issue, wherein 400 crores will be paid back to the company and reduce the debt. I think 15-20% would be a listing gain, but I think again one should look for long term only in Jyoti.
All right, Asta, what's your view on that? It's going to be listing in. Are you also expecting moderate gains?
Yes, so when this issue came, our advice was if an investor is a risk taker, then they go for small listing gain also. But we recommend it mainly for long term. But even for the risk takers, we recommend it to go for small listing gain in this IPO. So I think that is what we believe right now. Is also our belief is that maybe 15 to 20% kind of returns can be expected on this counter on the day of a listing. There are two, three major reasons. First of all, as Prashant sir has also said, that order book is very strong. So whenever the order book is strong, it gives a strong revenue visibility. 3,000 crore of order book right now, where the revenues are only 500 something crore in the latest financials which they have posted of H1 FY24. So the order book is it is like 3 to 4x of what the company is posting as a revenue. So strong order book. And yes, this company is into the computer numerical control machinery making, and what we have collected from our ground research also is that the company's product is very good. They are really in a great demand, and they are getting a strong boost in the aerospace and the defense sector, which is the major part of the order book also. So I think that sector will gonna fetch strong returns to the company going ahead, because of one of the subsidiary which was the loss making the company was not able to show strong financial performance, and that was due to the COVID reason. But I think going ahead now, company and the management is fully confident that the loss-making company will also turn around, and we will see the strong financial performance going ahead, and they will get the benefit of the operating leverage also. So I think this company is a vertically integrated company, well placed to cater the future opportunities. And yes, we are expecting 15 to 18% sort of returns on the listing day, and we have recommended for our clients also. And if someone wants to keep in the portfolio for long term, then definitely they can keep it for long term purpose also.
All right, Asta, that point was explained beautifully by you, and I also concur with that because I spoke to the management. They spoke about the plans of being debt free by 2025. Valuations are at a premium, but also the projections seem to be a little bit confident when it comes to the top line front, also, given the losses that we've seen of the subsidiaries and the turnaround that is expected to come through. But for
Right.
both Prashant and Asta, thank you so much for taking out the time and joining us. It was indeed a pleasure having a conversation with both of you.
Same.
Thank you.
Thank you so much.
All right, pleasure. All right, with this, it's a wrap. Thank you so much for tuning in.